Amazing programs have put home ownership within reach to so many people today, but the process can seem a little bit daunting. Where do you even begin? Stay tuned to find out if buying a house is right for you and just exactly how to go about doing it. I'm Jennifer Butcher with the Butcher team, and I have been in the mortgage business over 18 years. I have helped and had the privilege of helping so many people buy homes, but I have to say it's sitting at the closing table with first-time home buyers that I absolutely love the most. I wanted to be a teacher when I was a little girl, and that part of me comes out when I work with first-time home buyers because I absolutely love educating them on the process. And trust me, you are not alone if you feel like you don't know anything about the process or where even to begin. So let's take it slow, let's take baby steps and thoroughly go through each step and where to start the process. So first things first, you need to get your mortgage set up, right? If you want to buy a house, you have to get the money set up to make that purchase. So the first step is to fill out a mortgage application so that we can figure out if you're pre-approved for a mortgage and you qualify, which programs that you're qualified for, as well as the price range of the home that you should be shopping for. So how do you do that? Well, you can fill out an application online, or you can just call us and we can take an application over the phone. I know, what information are we going to ask? So first things first, we're gonna need your name, your date of birth, your social security number, your addresses or residence for the past 2 years. With that information, we can pull a credit report. In addition, we kind of have to figure out your price range. So we're also going to ask about your job and income history. We're gonna ask you for a 2-year work history. Don't worry, schooling counts and not all programs require it, but typically a 2-year work history. So your employer, your position, when you started, so how long you've been there, as well as your actual income. So if you are an hourly employee, your hourly rate and the number of hours that you work per week. And if you are a salary, then that's pretty simple, just the salary amount that you make per year. All right, what if I have bad credit? I get that all the time. What if my credit score doesn't qualify? That's okay. We're not just gonna hang up on you. We're going to make a plan. After 18 years, I've seen, I don't even know how many credit reports, but I can pretty easily look at a report and determine what needs to be done. Maybe credit repair is necessary. Maybe we actually have to bring in a credit repair agency to help us out a little bit, get old accounts deleted or whatnot to make it as efficient as possible. Other times though, we often can look at the report and I can either determine what needs to be done, or the agency that we actually pull our credit reports through has a program that we can kind of simulate what if you did this to your credit, how many points would you get? So between the two, we can really make a plan and determine how long that plan is gonna take so that we can have you plan accordingly when you should be ready to purchase a house. So don't be worried if you have bad credit. We absolutely will help set you up to get you on the right path. Now, if your credit qualifies, next we're gonna look at your debt to income ratio to determine how much of a house you can buy. Wait, what? My what? Your debt to income ratio. It's simple. We simply look at your monthly debts on your credit report and divide that by your gross income. Different programs have different ratio requirements. So that helps us to determine the maximum mortgage payment that you can qualify for based on your income. I told you there was a little bit of a teacher in me. Comment below and tell me what you wanted to be when you were little. All right, back to that mortgage payment. Let's break that down a little bit. You may have heard or read online of a mortgage payment being referred to as PITI. What that stands for is principal, interest, taxes, and insurance. So let's break it down. You're going to have the principal and interest portion of the payment, your loan, your actual mortgage payment, right? So if you have a car loan or a student loan payment, that's the principal and interest payment on that loan to get that the loan paid off over the course of the term of the loan. But we also have the T and the I. What is that? So it's the property taxes. When you purchase a house, there's going to be property taxes on that home. So we take 1/12 of that annual property tax amount. And then there is also going to be homeowner's insurance. And we take 1/12 of the homeowner's insurance. Now, if you put less than 20% down, depending on the program, you may also have what's called mortgage insurance. I know, I'm throwing all these insurances at you. Wait, what? Mortgage insurance or homeowner's insurance? I'll explain. The mortgage insurance is basically an insurance policy. The best way to think about it is an insurance policy for the lender because they're writing you a higher risk loan. So you're putting less than 20% down on your home, you have less skin in the game, so therefore you're going to pay for this insurance policy until you have 20% equity in the home, depending on the program. Homeowner's insurance, or hazard insurance as it's often called, that is the insurance that protects the home, just like your car insurance on your car. So if there's a bad storm that comes through and you have hail damage to your roof or siding, or goodness forbid, a fire takes the house down completely, that is the insurance that would kick in to help replace that home or repair the home if needed. So you have your PITI, your principal, interest, taxes, and insurance, and sometimes mortgage insurance. Okay, let's recap. You've applied for your mortgage. We've talked to you about your different loan programs available and given advice on which program we think is best for your needs. We've looked at your income and determined your price range, as well as if a down payment is required. Now, don't worry, if you don't have a down payment, there are many down payment assistance programs available. So if we know that ahead of time, then we can also match you up with the best down payment assistance program. All that, and you didn't even have to leave your house. See, it's really not so hard. But is buying a house the right decision for you? Truly, the first step is filling out that mortgage application and going through the pre-approval process, because everybody's situation is different, and until you do that, then you don't know what your picture looks like. So once you do, then you know, do you qualify? What type of programs do you qualify for? How much of a mortgage payment do you qualify for, and how much of a house would that get you? So oftentimes, once you go through that process and you can see the kind of your situation in the picture, then whether buying or not is right for you becomes a lot more clear. These are the very first steps of the home buying process and how to get started. I've written a guidebook here that walks you through the whole process. I also have these other videos that will tell you the next step to the home buying process, as well as the timeline of the whole process as a breakdown. Thanks for watching. If you like this video, please give me a thumbs up and subscribe, and we will see you next week. Thanks.